Hey, Jason here. Today's video, I'm going to answer the question, should you invest in Pharma stock Otsuka Holdings, OTSKY? This is an investment analysis for Tasha C, who requested this on YouTube. Before I get to this though, or before I get to that though, I need to let you know you can get this podcast anywhere in the world for free on all major podcasting platforms. Stitcher, Anchor, SoundCloud, Spotify, iTunes, and more. You can get this as part of the I Love Value Investing podcast or the Value Investing in Your Car podcast anywhere in the world for free. If you like this content and other content, make sure to subscribe and hit the notification bell so you're notified every time I release new videos. I release new videos all the time. Okay, before we get to the actual analysis, I apologize for this. If you see my other videos, I'm sorry. I don't want to do this. I have to do this because every time I don't, I get nasty comments. This video is for entertainment purposes only. This is not investment advice. This is to help you, the viewer, and the other viewers figure out or learn how to evaluate stocks better and faster. These analysis videos are, I think, 100% of them over the last 4 months have been from viewers on YouTube. Most of the time this means I do not know anything about the stock. Sometimes I do, most of the time I don't. If I don't know anything about the stock, I purposely do not learn anything about the stock before I do this video because I don't want to bias me either positively or negatively. This means I don't care about what the company's story is. I don't care what it plans to do 5 years from now. I don't care what the great things the CEO is saying. I don't care. If it doesn't meet my initial criteria at this stage, which is the first stage of my analysis right here, I don't care about that stuff at all. This also means for some stocks, or it leads from some stocks that we've had issues, which is where some of the negative comments come from. Also on top of that, I do not short sell ever. So I don't make money off of stocks that I talk negatively about, and I do not own any stocks in a long position that I talk positively about. So I don't profit either way. This is 100% for you to help you learn how to evaluate stocks better and faster. Why should you listen to anything I have to say? In the first 9 years of my career, I produced average annual returns in the portfolios I manage of 23.5% per year. This puts me just behind the great Warren Buffett at 24.2% per year in the first 9 years of his career when he was at the Buffett Limited Partnership. It legitimately makes me one of the best stock pickers in the world over the last 9 years. I'm not saying that to brag. I'm saying that to prove to you that I actually know what I'm talking about a little bit. Okay, that out of the way, let's get to the actual analysis. Again, I apologize for that. Don't want to do it. Have to do it apparently. Okay, so here we are. This was requested from Tasha C. Tasha C, thank you. This is Otsuka Holdings, stock ticker OTSKY. I've talked about this briefly before. If this is a foreign company, which this is, I can tell, yeah, Japan-based company. Foreign-based companies, it's listing on the OTC markets, typically have, unless they're bigger companies, and even in some cases like Nestle, their ticker is NSRGY. If you see a foreign listed company with 5 letters in the ticker and it ends in Y, that means it is the US based listing on the OTC markets. If it ends in F, that means you're buying shares in the company on the foreign exchange. In this case, the Japanese Nikkei, I think. I'm not sure how you pronounce it, but I'm pretty sure it's a Nikkei. Is what their stock exchange is. So that means you would be buying Otsuka shares on the Japanese stock market. There are pros and cons to both of these things. If you buy on the US market, typically there's more liquidity, depending on the size of the company. And you can buy and sell it more easily. Again, this varies though, depending on the size of the company. The biggest thing with the Y ending ADR stocks though, and this is an American Depository Receipt is what they're called. If you want to look that up, because that is frankly a little bit boring, go ahead and look it up on Google or Investopedia. What it essentially means is a foreign company outside the US is trying to list shares in the US without doing another IPO after they've already IPO'd on their home stock market usually. So they list on the OTC markets or the pink sheets. If another main benefit to the Y ending ADRs is they trade just like regular stocks, meaning if you pay $6.95 from your brokerage to buy and sell normal stocks, that's what you pay here. The F ending ADRs not only do they typically have lower liquidity because they're listed on the foreign markets where there's not as much trading activity as there is in the U.S., it also means for most brokerages that you have to pay a huge fee. In the case of my broker, or my brokerage that I invest in, it's a fee of $75 per transaction that you have to pay to buy or sell shares in these companies. There are the brokers like Interactive Brokers and some others that the fee is lower, and I am considering changing at some point, but it is something to watch out if you're investing in these kind of companies. Okay, here's a dividend. Market cap 23.1 billion. Looks, I don't care much for PE or price of sales, but these are two signs the company might be undervalued. I look for under 20 on PE, and I don't really, again, I don't care at all for price of sales, but anything around 1 is typically good for price of sales. Okay, Otsuka Holdings is a Japan-based company. Operates in pharmaceuticals, nutraceuticals, and consumer products. Business activity of the company includes providing healthcare solutions in the areas of nervous system, oncology, cardiovascular system, respiratory system, infectious disease, and others. It is also engaged in the research and development of functional foods and beverages such as electrolyte drinks, nutritional foods, soy snacks, and dietary foods. In addition, it also operates multiple businesses related to chemicals, transportation, warehousing, and electronic equipment. Geographically, it operates in Japan, North America, and other regions, of which Japan accounts for the largest share of revenue. Okay, so they're in a little bit of everything. Mainly a drug company, but they do have other operations as well. Nothing of major note, like we've talked about in the last couple of analysis. Okay, something we're going to have to do here is convert this to US dollars. So, JPY to USD. Because I don't know what 1, 4, 2, that's what they're in millions. So millions, billions, trillions. That's trillions, 1.42 trillion yen. 0.42, oops. So that's like 13 billion US dollars. Okay. And that's gone up. The revenues actually fluctuated pretty decently. It's about on level with its highest levels ever, which was 2014, 2015, and 2020. So its revenue's gone up since 2011, but it's kind of stagnated a little bit in the middle of the decade to now. Not necessarily a bad thing, just something of note. Operating margin is very good at the beginning of the decade, falls off a little bit in the middle of the decade, increases at the end of the decade. When I see this from a company, it means likely they were having major success in the beginning of the decade, obviously. Then something happened that caused these lower operating profits from 25%, 27% at the beginning of the decade to 10%, 6%, 7% in the middle of the decade, and they're up again towards the end of the decade. Right now it's 14.6%. I look for anything above 10% on a consistent basis, so this is pretty good. I would want to figure out what happened in the middle of the decade and whether or not I expect it to continue earning the operating profits it's earning now, the ones in the middle of the decade, the ones at the beginning of the decade. I would want to figure out that, and that would take me looking at the actual 10Ks and stuff like that, the historical record of that. Okay, they have bought back shares. That's interesting. Bought back some shares, about 80 million shares since 2012. That's interesting. And book value per share has gone up, which is most of the time a good thing, unless it gets to goodwill and stuff like that, which we'll talk about if we see that on the balance sheet. But the book value going up is one indicator that the intrinsic value of the company is going up as well. ROICs are okay. I look for anything above 10% on a consistent basis. They only surpassed that threshold 1 year in 2014. And since then, they've been between about 4% and 8%. So they're okay, not terrible, not great. Not a red flag. That just doesn't meet my thresholds. This does, though, at least in the recent times. So free cash flow to sales, I look for anything above 5% on a consistent basis. Theirs has fluctuated again quite a bit as their business has likely gone up and down. Right now it's sitting at 10.5%, but it's fluctuated over the last decade from between 2% and 12.5%. So pretty good overall. Okay. Accounts receivable, inventory, tangibles. We're going to talk about those in a minute. That's the goodwill and stuff, and partially the goodwill and other stuff. This is likely because our pharmaceutical company patents and stuff like that. So we're going to get more into detail into that when we get to the balance sheet. Long-term liabilities. The liabilities are super low. Liabilities only make up 27.8% of the trailing 12-month balance sheet, which is or the last quarter balance sheet, which is fantastic. That provides a huge margin of safety. Cash conversion cycle is about on par for the last decade of right around 105 days. It went up briefly, went down briefly, but that's kind of where it's been at most of the decade. Pretty clean company so far. The debt to equity ratio, I look for anything under 1, but it also depends on how much cash flow the company produces, blah blah, all that kind of stuff. But generally, yeah, I look for anything under 1. So this at 0.12 is very good. Okay, these are also in yen billions, so they have 434 billion. 434.3 billion, so that's like 3.92 billion in US dollars. Oops. I'm getting that for reference to compare it to debt, which I'll do here in a second. Ton of accounts receivable. Inventories have gone up slightly compared to where they were this time last year. Not a huge deal. Goodwill. Okay, so here's where we get to goodwill. So they have about 279 billion yen. 5, so that's like $2.5 billion. So that's like $2.5 billion. They have more, or that we're talking about goodwill. So $2.5 billion. What size is the company? So $23 billion. That's a decent amount of goodwill. Why I mentioned goodwill when we were talking about, and let's go back over time. Let's go back over the annuals. Goodwill. So the goodwill stayed relatively similar. It's gone up by about 30 billion yen in the last 5 years, which is $270 million ish. So not a huge increase there in the last 5 years. What this likely means is they bought a company. Most likely, I can probably tell. I cannot tell by looking at this sheet at the key ratios tab because it doesn't go back before 2015. My guess is they bought a company sometime between 2013 2017. They bought another company, and that gave them a decent amount of goodwill, which is part of the reason their book value per share has gone up. When that happens, because book value is not valuable in my opinion, 99% of cases, it's pretty much useless as an economic number, or in terms of the operations economically of the company. It's just an accounting number more than anything. That is not a great thing that it increased the value partially from the book value per share, but it's also increased it, I can tell, from the increase in overall value of the company as well, the underlying value of the company, sorry, because of profits going up and revenue, or not profits and cash flows, there we go, going up, stuff like that. Okay, intangible, net intangible. Okay, I have a lot of long-term equity investments. I'd be interested to know what those were. Ton of long-term investments, 404 billion yen, which is about 3.7 billion US. I would want to know what that is. if I were to buy stock in this company, because that's very interesting. Debt is super low, like we talked about earlier, in terms of current debt especially. Long-term debt is low as well, especially compared to their cash. They have more cash than debt, which increases the margin of safety. And nothing else of major note here. Total equity. Yeah, nothing else of major note. Cash flow statement now. Nothing much so far. A very clean balance, or a very clean cash flow statement. Well, they do have a pretty clean balance sheet as well, other than the goodwill. But very clean valuation, or very clean cash flow statement. So at this stage, Otsuka looks like a decent investment. I would want to figure out a couple things, like where are the margins, where do I expect them to go over time, what their long-term investments are, why they have so many different kind of random operations that they operate in outside of pharmaceuticals. Is it to vertically integrate partially with the transportation stuff so they can, for example, transport the drugs they produce? Is it a completely separate business entity? I would want to know those things, but other than that, it looks like good potential investment at this point. And then we'll probably go here and see that it's overvalued. It is not actually super overvalued. Interesting. The reason I assumed it was going to be massively overvalued right now was because most companies worldwide are massively overvalued right now, because the stock market is massively overvalued right now. This one is not. Again, I don't care much for PE, price to cash flow, or forward PE, but when I do, I want them to be under 20. PE is 16.3. Price to cash flow is 10.8. Forward PE is 17.3. Those are all under what I look for. This is the most important number though, EV to EBIT. I look for anything under 8 to consider the company undervalued. Right now this is at 11. So this is showing that the company's about fairly valued, which by itself is interesting. So very good looking company here, potentially. So what we're going to do, and this is only the second time this is going to happen. I'm going to bring this back. Bring my face back. This is only the second time we've done this so far, is because most companies, again, are massively overvalued, or they have debt issues, or they have profitability or cash flow issues, something along the lines. This company doesn't have much of that. We're going to take this to the next stage of analysis, which for me is doing the actual full sheet, writing out the full sheet, and doing some basic valuations. I think there's 4 different basic valuations on there that we do. So we're going to do that on Otsuka. In the coming weeks. I'm going to put it on my calendar so I don't forget, like last time we found one of these. And I'm going to put it on my calendar so we can analyze this company for you, Tasha C, and the rest of the people watching out there. Great looking potential stock, honestly. Interesting. Again, I would want to find out more things later down the road, but if it passes my next threshold, so this analysis we just did, this is my first threshold, or this is my first stage of analysis. Second stage is doing the full worksheet plus those valuations. If it still passes that, then we start looking at the financials, the actual financials, and the annual reports, proxy reports, quarterly reports, stuff like that. If we get to that stage, I'll bring you that video. But next stage, we're definitely going to for Otsuka. And do some basic evaluations, stuff like that. So great looking potential stock here, Tasha C. I know you're probably gonna ask, still too early to analyze at this point, or still too early to say for sure, because again, this is only, even after my third stage, which is actually reading the financials, I still have other stages past that, so which we'll get to if we get to. But we have not at this point, and this is only the second company actually that has gotten to this second stage. So we will do that in the coming weeks. If I didn't explain something well enough, If you wanted, if I didn't explain something at all that I should have, if I missed something, let me know in the comments below. If you like this analysis, or if you like this video, thanks for watching so much, by the way. Make sure to like, love, share, subscribe, comment, all that good stuff. And also hit the subscribe button and the bell so you're notified every time we're releasing a video, and releasing new videos all the time. Same stuff on the podcast. Really appreciate you listening. Really appreciate all this stuff. We all, on the podcast specifically, we'd also really appreciate a review, because the more reviews, views, and listens we get to our content, the more people we can help. If you want me to analyze a stock like this for you, I'll do so anywhere in the world. Again, this is a Japanese company. I've evaluated companies several different countries already. I'll do so anywhere in the world. The only stocks I will not look at are banks, because I don't evaluate banks, insurance companies, because you actually have to look at the 10Ks and the annual reports to analyze those, and the company has to be producing revenue. Why does that have to be producing revenue? Because for a while there, we were getting companies that were producing no revenue, and the analysis was frankly boring and useless from my end, because I don't care about the story. I don't care what it says it's going to do until way later in my analysis process. So I apologize for that. That was my phone going off. But if you want me to look at a stock and it meets those three criteria, I'll do so anywhere in the world. Just let me know in the comments below. If you like this content and you want more of it for free, make sure to check out the resources below. You can get our 5 free gifts, which the full written resource, which we're going to do in a couple weeks for this company, for Otsuka, we've already done for WhitePoint. You can find the full worksheet so you can do this yourself, find companies better and faster. At the link below, 5 free gifts. You can also get a free PDF copy of my book, How to Value Invest. You can also get a copy of our guide, 7 tips to picking great stocks 3 times you must sell. You can get all 3 of those for free at the links below. If you're looking for more specific help from me on how to become a better investor faster, you can also check out the information on our masterclass below this as well. But until next time, have a great day. Talk soon.